Good morning, everybody. Good afternoon to my friends across the pond. I love that opening, don't you? It just gets me so pumped, so excited. It's a new day, another day for trading, and I could not be more pumped for it today. Why today? Because I'm doing something special. I am launching my own quote-unquote ETF around small caps, along with Hans Albrecht, and I can't wait to start trading it in this portfolio. And I want you to join me. So let me walk you through what we're doing and why. If you want to, for those of you who don't know me, I am Mark Sebastian, as you can see on the screen right here. And I am the founder of OptionPit.com. I am the CEO, and I love being a part of this team. So let's take a look at let's share my screen. And today we're going to talk about our custom small cap ETF. All right, today we're going to talk about why a Fed rate cut and small cap AI catalyst is a generational opportunity. I'm going to give you 2 free ETF plays, IWM PSCT, with my price targets. I'm going to give you an example of when we want to buy a stock and when we don't want to buy a stock. I'm going to talk about what's happening today with the OptionPit Small Cap Fund and what's happening this month with special situations. So it should be fun and exciting. All right. Small caps tend to be the biggest beneficiaries of rate cuts. Why? They carry a lot of debt. They are in their infancy, so they have a lot of investing to do, right? These aren't mature companies sitting on tons of cash. So when rates drop, their ability to use capital becomes easier and easier and more cost-friendly. So it tends to really benefit small caps. Now, we're also in this world where AI is in the middle of mass adoption and is becoming bigger and bigger and bigger. AI is a huge deal. And so we've got these 2 forces that are pushing the market higher. There's a reason NVIDIA is the most valuable company in the world. And there's a reason why, interest rate sensitive stocks have been doing really well. So what I'm trying to do is merge the 2. I want small cap stocks that are going to benefit from rate cuts and also have that AI focus. Because a lot of people don't remember, Tesla was a small cap at one point. Apple was a small cap. Heck, even Microsoft was, not for very long, but it was. And so very rarely do companies go from, just immediately into large cap. It's a rarity. So we're trying to find the next big companies, and that's what we're after. So let's start with the Russell 2000. As you can see, it's had a little bit of a nice run here, as have the markets. But actually, it's trailed the S&P and the Triple Q and the Dow. But I want you to notice how interest rate sensitive this index is. Here's the Fed rate cut, and here's the move it's made. Now, it's still hanging out there because we're still trying to figure out what the Fed's path is. We have non-farm payrolls tomorrow. But I want you to know that these big moves are when we get inklings that there's going to be significant changes in interest rates to the downside. And you can see, like, here's when Powell made his pivot. Here's that rate cut, and you can see kind of how this thing has moved. My target for IWM, it's sitting at its all-time high. I think it's got more upside. I'm looking for 267 and 2 cents. Not 1, not 3, 2. And there's some methodology around that. But I think it's going to get there, and pretty quickly. Now, as much as I like IWM, and I do, let me be clear, I own a bunch of it. I also think we want that AI focused. And so there is a small cap ETF that focuses on tech. Its symbol is PSCT. It is even more interest rate sensitive than the regular IWM. It's been on a tear, and I think it's going to continue to be on a tear. I think this thing, it's currently about $53, $54. I think it's going to 78 before all is said and done. So we're at the beginning of a long-term small cap growth phase. The opportunity is going to get 10 times bigger if you can target the few tech small caps with the most upside. That's why we're here. And that's why Hans and I are building this OPSC. It's our ETF. Now, it is not a real ETF. You're not going to be able to find it surfing the internet or typing it into TD Ameritrade. But it's going to be kind of managed like an ETF, like a basket. And that is why we're calling it an ETF. And, we've talked about building ETFs in the past, and, we might do one in the future. This might be it. We'll see. We're going to build it together with all members of Special Situations Unlimited starting today. We have 7 small cap stocks with the most upside to gain from the upcoming rate cuts and the current AI boom. Today, I'm going to walk you through that process of how I found those stocks. All right, so we started with the 72 names in the PSCT. Andrew looked at the volatilities. Frank looked at the macro and government story. Hans and I evaluated those AI implications, and we had Alicia look at the technicals. This is a group effort. And we landed on these 7 names, which make up OPSC, which we're launching today. So here is some criteria to think about. And this really should, pay attention here. This is how you should approach every stock. You want to own companies that other companies want to own. One of the reasons why I never bailed on Intel was because firms wanted to buy them. And lo and behold, look what's happening. They're getting investments left and right in deals. So then you want a macro story. Why is this industry getting bigger? And will it continue to? And then you're looking at a micro story. Why is this company uniquely positioned to become a leader in the industry? This should be an application, folks, that you're putting on every single stock that you trade. All right. Then we have the different stages of company. The Caterpillar stage, positive cash flow, making money on a cash basis, but reallocating to keep taxes low or reinvesting. The butterfly is breaking out of the chrysalis. Then you have positive P&L. The business can stand alone. And just remember that the criteria can shift based on the industry you're vetting. So, for instance, like rare earth companies are going to be a lot newer, right? Those companies, you might just say, I want them having a product. Whereas a chip company has to be more mature to be successful. So here's an example of one that we passed on. All right. So here's are my steps for when I invest. Am I bullish the market? That doesn't mean we're in a bull market. Am I bullish the market? Yes. And let me talk about that. Some of my best trades have been when the market is in a full-on free fall. Some of my worst trades have been when we've been in a bull market. So it's important to kind of recognize that you want to be long this market, not that consensus. Step 2, are you bullish the specific industry or sector? Right? I'm not buying small caps in lottery tickets or in tobacco or in utilities. It's got to be that specific industry, AI being that. I'm bullish AI. I think everybody here should be. Yeah. So it's cloud. That's AI related. And yes, I'm bullish that industry. What is the leading stock in that stock range? Large cap, mid cap, small cap. Small cap in a big world. That was the problem with Box. Amazon, Microsoft, and Google basically do what Box does. I don't want to be, you don't want to invest in also rans. One of the things my father always told me, he goes, Mark, buy the best company in the industry. Maybe the second. Don't buy also rans. What stage is this industry in? Is it in its infancy? Is it a teenager? Is it mature? Or is it an old man like Andrew Giovinazzi? And that's going to kind of really dictate how you invest, right? And what you're going after. Industries that are, infancy and teenage, those are the areas where small caps can really crush it. All right. Does your potential stock have any cash flow at all? And this is a full-on stop. I don't invest in companies that don't make anything, that don't have a product yet. Biotech maybe is kind of the lone exception there when you've got a company researching something interesting. But generally speaking, if your company is in the business of, or claims to be in the business of making stuff, and they're not making anything, that is a bad investment. I can give you a whole list of examples. The classic one is Nikola. Right? People were putting billions of dollars into Nikola, and they didn't have a single truck. So yeah, Box does have cash flow. Your potential stock have positive cash flow. That is also really positive, right? I typically prefer companies, even in small caps, that have positive cash flow. I can give a little on number 7. Does it have positive P&L? Yes. But any stock that I'm going to invest needs to be number 5. They have to be making something and have revenue. And I prefer positive cash flow. And in best case, I want a P&L. Are their earnings growing? All right. Are steps 5 through 7 going up? Is cash flow going up? Is there positive cash flow going up? Is there P&L going higher? I want those up, not down. All right. And then finally, remember, stocks are for suckers. What in the money call are you going to buy when you get done with that? Options are just so much more capital efficient than stock when done right. All right. So we're going to keep looking on, and we're going to pass on box. Now, here's one we are going to buy. Am I still bullish this market? Yes, I am. Am I bullish the industry the stock is in? Semiconductors? You bet your bottom dollar. What is the leading stock in that range? Large cap, mid cap, small cap. Now, semiconductors are a little weird, right? When you think semiconductors, you think Intel, AMD, and NVIDIA, right? Those are the three to come to mind. Right? And, you know, think about all the other small semiconductor companies in there that are all over the board. And they can be a lot of fun. And they have little niches within the semiconductor industry, right? They do. What stage is the industry in? Well, that's the funny thing about semiconductors is they're never mature. If you know, they'll go through these periods where things maybe stop moving as much, but then they'll take off again. Look at Intel. Intel thought it was in a mature industry. And what happened to Intel? It got completely flat-footed and got run over by AMD and NVIDIA. They're just now starting to catch up. And frankly, the reason to invest in Intel is the foundry business, not the chip business. Casper the Friendly Ghost says, Intel was late to the AI game. I worked there. They were late to the AI game. But like Casper, you can tell me if you think I'm wrong, but I think the foundry business is the most important part of that whole company. So what stage is the industry in? You know, it's a tween. You know, some of it is mature and some of it is in its infancy. All right, your potential stock. All right, does it have cash flow? Yes. Does it have positive cash flow? Yes. Does it have positive P&L? Yes. Are their earnings growing? Yes. This is hitting on all, I was going to say all cylinders, but let's say all conductors. And then remember, stocks are for suckers. What in the money call am I going to buy? And that is going to be an OPSC, which launches today. All right, so here's a couple of companies on our list. We've got an energy tech company. They're going to provide energy for data centers. You know, $40, target is $59. We got a $60 semiconductor company, target is $73. $95 chip maker supply chain company, target is $158. All right. And on every OPSC stock, we'll have a long-term option play targeting at least 100% profit. So join us in Special Situations Unlimited. All right. And here's what you're going to get. You're going to trade the most exciting events in the market every single month. All right. That's earnings, Fed meetings, M&A, mergers and acquisitions. Maybe my favorite trade are M&A ARB. volatility anomalies. On average, we typically do about 4 to 6 trades per month. We do buy and sell alerts on all new trades, monthly position update, special newsletter. Now, this is something fun and new that I'm working on. All right. How many people know that I'm not just an option trader? All right. Well, yes, of course, I'm a father, I'm a husband, I'm an uncle. But I used to do a lot of, when Option Pit was in its infancy, we did a lot of consulting work. I would do two things. All right. One, I would basically build hedging programs for asset managers. We have I've got a good friend, still a customer in Nova Scotia that loves the system that I built for him. I am also a Chicago sports fan. And then the other piece I used to do is I used to do deep dive research for option brokerage firms. And so I would do a dive on a stock, and then I would build an option play around it. And this was a pretty large firm. I can't tell you the name of the firm, but it was a very, very large broker. And part of what I'm be doing with my special situation newsletter is a monthly deep dive on a trade idea. And I'm going to be doing full-on stock research. I am a Wordle master. Thank you. I got Wordle in 2 yesterday. And that is one of the exciting things that I'm looking forward to do. What is the source of your deep dive research? I look at fundamentals. I look at the financials. I look at the growth story. And then, there's some other little things. Then I do a deep dive on the options. It's really fun. So that is something we're rolling in to special situations that I can't wait for. You're going to custom calendar to track all upcoming opportunities, monthly live meetings. All right. And here's our track record on the special situations that we've done. All right. Not everything's going to be a winner, but one trade per week, average about 20, a little less than 20% a trade. And if you did all these, you'd be up about $5,100. Most of these are kind of post-earnings trades, but you got some other fun ones in there. U.S. Steel was a merger and acquisition play. I am a book author. Thank you, Bob. All right. So, we'll do takeover trades. This was a fun one. All right. And U.S. Steel, we did kind of 3 trades in it. We bought puts, we bought calls, and then we bought more calls. And when you add everything up, it was a really nice win. NVIDIA post earnings trades. We did Google, we did Amazon, we did NVIDIA. Paychex did not work out. IBM did not work out, but the rest of those were pretty darn good. And folks, I'll tell you about my winners and my losers. Zero decay trades. I love zero decay trades. TFC did not go the way I wanted. Amazon did, Apple did, and BP did. And then we'll do some stock plays. LAC in at 295, out at 575. And you can see people were very happy with the win in LAC. Scott did options instead of the straight stock and made 527%. That's the power of options, folks. People say why do I buy options instead of stock? I think Scott MCN is the classic example. Right? I bought the stock and made 100%. Scott bought options and did 527%. Trade opportunities in the next 30 days. All right. We've got our live meeting today. We have the unemployment report tomorrow if it doesn't get delayed. We've got huge bank earnings coming up in October. CPI coming up in October. We've got more earnings at the end of the month at Netflix, GE, Triple M, Tesla, IBM, Google, Starbucks. And the week after that, you're going to get Microsoft and Apple and Meta. It's going to be a lot of fun. All right. So, and we got some bonuses. Access to all. So this is what is cool about special situations is that it is the only product we have outside of Pro that's $15,000 a year where all of our traders are kind of involved. All right, you've got post earnings trades. We're in the Costco trade now. But you can still get in it actually today if you want. It's still there. And then we've got our, again, live class today at 2 p.m. That's when we're going to set the portfolio together. Hans and I are both going to be there. We're going to talk about the methodology in a little bit more. And then we're going to talk about each stock and why we like it. And then we're going to put a trade on it. And then, again, ongoing stock plays. These are, kind of when we see something that the street is treating like trash and we see as treasure, then those will be our stock plays. And I'll get to all your questions here in a minute. So, Special Situations Unlimited. It's a one-time $12.99 upfront, and then $129 a year to continue the subscription, your maintenance fee. It comes with, it's unlimited only is going to get this small cap ETF play and the 2-day live small cap masterclass. Hans, myself, Andrew, Alicia, and Frank will be educating you on. Now, if you're saying, Mark, I just met you. The only thing that I know about you is that you like the Cubs and you got Wardle in 2 yesterday. Took me 4 today. Then you can try the monthly and you can do the post earnings play. You can do the CPI plays, the zero decay plays, and, kind of feel us out. But I would say, $12.99 plus the $129 maintenance fee. And if you're already a member of Special Situations and you want to upgrade to unlimited, give my team a call, 888-872-3301. You might have credits. They're going to take care of you. My team is absolutely amazing. My customer care team is the best in the business because they have the same mentality as I do, which is what is best for you. So you're going to get that small cap ETF. You're going to get the 2-day live masterclass. That is only an unlimited. You can click the link here. You can click the link that's pinned, or you can call my incredible team. 888-872-3301. Spiffy says, your customer care team is the best ever. I concur, Spiffy. All right, so let's see what kind of questions we have here. All right. I am a Chicago sports fan. That's correct. Mark, are we going to hedge the ETF in any way? There may be times where we put hedges on around it, but generally speaking, it is not going to be we're not going to be kind of constantly hedged. There may be very specific situations where we want to hedge the market, but generally speaking, we're not going to be putting on hedges. This is a long portfolio. What is the source of my deep dive research? I have some professional tools that I use. I talk to people I actually talk to other people. One of the most important things to do, and this is why we have these 24-hour, 7-day a week chat rooms, including special situations. The interaction with traders is where I get some of my best ideas and where you can probably get some of your best ideas. Mark, can you help us with relationships? It depends. Let's see. All right. So will the instruments in the ETF be options or stocks? They will be options. Is Spiffy your wife? No. No. Spiffy is not. Do I get credits for my name showing up in the slide? Give the team a call, 888-872-3301. This isn't at Scavenger. I think you fill it in. This isn't stock pit. This is option pit. We trade options. Is this all chip approved? You mean I do not see special situations unlimited in the calendar. What time today? It is going to be at 2 p.m. 2 p.m. Eastern. All right. Sometimes we do penny stocks. We will not be doing penny stocks in this trade. All of these are real companies. That's one of the things that we made sure of. All right, everybody. It is 10:33. One last time, click the link. Call us 888-872-3301. Look for small caps to have a really nice next 90 to 180 days. And I am Mark Sebastian. I am your only option. Have a good one.